get to Telstra CEO now. David Thodey joins us from our Sydney studios. David, great to have you with us. Let's talk about what's happening on the stock markets right now. Unfortunately, your shares are being hammered down 4% after you forecast revenue to be pretty flat for the business year. And despite going mobile, you're still losing ground to your competitor, Optus. How disappointing is this to you with the second downgraded 2 months?
Well, it's the results have been actually quite encouraging in some areas. Free cash flow was up 37%. Profit actually was pretty strong. EBITDA margins are good, but we did suffer in terms of revenue growth. But that was primarily because of our PSTN calling decline, and that's something that is the decline has accelerated away on us, and it has been for the last 3 or 4 months, and that's why we've had to signal that the top line revenue will not be as strong as we'd expected. Yeah,
but there is some encouragement considering you're keeping your full year forecast intact. So second half should be looking pretty good. But you know what else has been spooking investors, David? It's these ongoing talks with the government to split your fixed line business, and this delay with NBN pretty much is shaking investors' confidence right now. People are asking, when are you expecting a resolution?
We'd like it as soon as possible, but these are very complex negotiations, and we've made a commitment. We must work through all the detail to make sure that we really look at every option we have. So if it takes a few more weeks or months, we'll take it. But we do want to get to resolution as soon as possible. We've been very consistent in what we've said. We'll enter into constructive discussions with the government and work as best as we can to come to resolution. However, our primary focus is around shareholder value, and that's what will drive our decisions.
Now, can you give us any indication at all in terms of timeline for the negotiations to end? People really would like to know if you can get these talks done.
Well, I wish I could. All I can say is as soon as possible. We will not be moved until we've got to explore all the options, really explored all the detail, but as soon as possible, because it's a distraction for all of us, both the government, NBN, ourselves. So we're working diligently at it. As soon as we know something more, we're going to let the market know and our investors.
Okay, so David, would you say it's a bit of a stretch for investors who want these talks to be done by the end of this month?
I think so. I think so. But you never know. If we could, we will. But I don't want to be, well, I can't be held to any time because we just don't know. We're actively engaged. We're very constructively engaged. And if we can get to a conclusion, we will. But we just can't be rushed on it. And so that's just the way it is. And
yeah, I understand there are more than 2 parties or 1 party involved in these discussions. Okay, well, let's talk about longer term then, David, because Telstra facing increasing competition, as I mentioned, from the likes of Optus, also lower prices and market share loss. How do you and Telstra plan to address these challenges?
Well, we want to address them aggressively because we want to make sure that we really go after market share. We've already introduced a number of new plans into the market, wireless broadband, fixed broadband, and then also some packages, and we're very pleased with the results. But this is about being a aggressive market competitor. Of course, we're always balancing profitability and share, but we remain very enthusiastic about the market opportunity. We're seeing great potential in wireless. We've got new products coming to market in the next couple of months. So we remain optimistic, but the impact of that PSTN decline is very hard for us to make up. So we've just got to be prudent, and but we will be aggressive and in the market competing with as hard as we can.
Yeah, okay, so you're going to be pretty hard in the domestic market. What about looking overseas, such as your competitors like Singtel, which have bought into Optus, into your own backyard, basically your own domestic market? After all, Telstra's, your Chinese online business, Soufun, actually did pretty well. Income growth of almost 14%, which is the highest among all the units that you own. What about listing this unit? When is that going to take place? That will bring in some pretty good cash.
Well, you're right. We've made the decision that we'll do an IPO on Soufun. That's planned for the end of this financial year, so about mid-year. But that'll be dependent on how markets are. So we've not set a firm date, but we've done a lot of good work to get prepared for that. So we remain very committed to the digital media business in China. It's been very good for us. Our trading in Hong Kong with CSL has been more challenged because the Hong Kong market has been tough. We've seen quite significant GDP decline there. But that whole international portfolio will continue to play an important part for us as we move forward.
And David, you said Soufun, you're looking for a listing maybe in mid-year. People are wondering where. Here in Hong Kong, Australia, or even the US, where a lot of Chinese tech companies have done pretty well in listing.
Yeah, there are. Yeah, look, we're just working through the details now with the bankers, so we'll make a decision. We want to obviously have it as broadly based as possible, but we haven't finalised on where we will actually do that listing.
Okay, and which of these three markets do you think makes more sense to you to list Soufun? How about that?
Look, I really wouldn't want to be drawn on it at the moment because it might set some expectation. Obviously, the US is attractive, but until we've worked through with the bankers, we just want to reserve that judgment.
Okay, and one more question for you, David, because you know, I hear that a lot of buyers, well, there are some buyers in the market for your stock today based on that attractive dividend that Telstra pays, 28 cents on the share, which is probably one of the highest in the Asia Pac. So people are looking at this dividend payout, this dividend yield pretty closely, David. Is Telstra going to keep it the way it is? Is there going to be any change here?
We don't anticipate any significant change. As you say, it's fully franked dividend, which is very important for our retail shareholders. And we've always been a strong dividend stock and will continue to be as we go forward. It's all driven by free cash flow. Remember that we've committed to our guidance of $6 billion of free cash for the year, which is a critical metric for us as we go forward, while still investing in the business as we go forward.
Okay, one more question for you, David. What about a special cash payout? Can we expect one or possibly a share buyback?
Look, that's a matter for the board, and they consider that you know, actively. I think the short answer is if we don't see anything better to do with it, we're very keen to give it back to shareholders. But that decision is made at the half and the full year by the board.
Hey, David, thanks so much for your time today and dropping by. That's David Thodey, the CEO of Telstra, joining us there from Sydney. Thank